Hello, Americans. iBankerU. Stand by for news. Is your house effectively free if your bank collapses before your mortgage is paid? Many think so. I see this in the comments regularly. Sounds like a banker question if ever there was one. So let's examine. It's the question nobody wants to ask until the ATM stops working and the bank doors are locked. You've spent years paying down your mortgage. You've built equity. You call that house yours. But if the global banking system actually resets, if the institution holding your note vanishes overnight, does your debt vanish with it? Most people think a bank collapse means a clean slate. They think the digital record of their debt burns down with the building. Well, I'm telling you right now, that is a dangerous delusion. Today, we're going behind the curtain of the banking world to see exactly who shows up at your door when the bank is gone. This is the insider reality of a systemic collapse. The legal reality, the debt never dies. First, let's clear up the biggest myth. When a bank fails, your mortgage does not just disappear. In the banking world, your debt isn't just a bill, it's an asset. It has value. If Bank A collapses, the FDIC or a bankruptcy court steps in. They do not say, "Congratulations, your house is yours." They treat your mortgage like a piece of furniture in an estate sale. They sell it. Usually, it's sold for pennies on the dollar to a vulture fund or a larger surviving institution. You won't get a paid in full notice. You will get a letter from a company you've never heard of telling you that your payments are now due to them. The building might be gone, but the legal claim on your land is eternal. So, the servicer trap. Here's where it gets tactical for you and me. Most of you don't actually pay your bank. You pay a servicer. In a collapse, the system that tracks your payments, the escrow for your taxes and insurance, it can freeze. Imagine this. The bank is failing. The software glitches. You make your monthly payment, but it disappears into a black hole of pending transactions, or worse. The servicer stops paying your property taxes from your escrow account. In a 1990s-style Bosnia scenario, or a modern systemic reset, the biggest threat isn't the bank failing, it's the chaos of the transition. If you can't prove you paid because of the digital ledger is offline, you are at the mercy of whoever bought your debt. The survival blueprint. So, as an iBanker, what am I doing? And what should you be doing right now? Well, number one, paper trails, always paper trails. If the grid goes dark or the bank servers fry, your digital statement is worthless. Every single month, you need a physical printed copy of your mortgage balance and your last 12 months of payments. In a collapse, possession of the proof is 9/10 of the law. Number two, the tax gap. If the bank fails, they stop paying your property taxes. If you aren't watching, your local government can seize your home for unpaid taxes long before the bank ever forecloses. You must have the cash reserves to pay those taxes directly if the escrow fails. Number three, hard asset leverage. Remember, in a true collapse, currency is a moving target. If you have a fixed rate mortgage and we hit hyperinflation, that debt actually becomes easier to pay off. If you have hard assets like silver or skills to trade for the new currency. The closing. The banks are fragile, but the legal system that protects debt is incredibly resilient. Don't wait for the collapse to find out who owns your roof. Start your paper trail today. Look at the numbers so you can protect the life you have built. Now you know the rest of the story for what happens to your mortgage when banks actually collapse. Build that stack. iBankerU. Good day.